Hi everyone, welcome to Malitaba Accounting Academy. So on this tutorial, we are still doing bank reconciliation. On this tutorial, we're going to specifically look at the reasons that result into discrepancies between the bank statement and the cash journals. So remember what I said with regards to bank reconciliation. So what we do is we compare the bank statement against we compare the bank statement against the cash journals. And then we need to identify the discrepancies. Once we've identified those, we need to investigate what is the reason behind these discrepancies. Once we've investigated, then we need to go and do the necessary amendments or additions, or adjustments, either on the cash journals or on a bank reconciliation statement. Right? Okay, now let's look into the possible reasons that could result into us seeing or identifying discrepancies between the bank statements and the cash journals. So the first one is error or errors. So this is when there is a discrepancy between a transaction recorded by both the bank and the business. So what do I mean by that? Say, for example, we purchased a trading stock as the business using cash. So obviously we're going to record that amount. We're going to record that transaction on our cash payment journal, right? And we recorded that we purchased this stock at 350. But on the bank statement, the very same transaction, it is reflecting that we purchased the stock at 200. So obviously the figures are different, but it's the same transaction. So that what does that mean? We need to investigate now who made the error. Did the business make the error and has the business recorded the incorrect figure, or has the bank recorded the incorrect figure? So if the business is the one that has made the error, we need to go and fix that error, or we need to go and make the necessary amendment on our cash journals. Right, we need to go and make the necessary amendment on our cash journals. But if the error is made by the bank, we need to go and add the difference or record this difference on what we refer to as a bank reconciliation statement. So basically, all the errors which are made by the business, they need to be amended on the cash journals of the business by the business. And then all these, if it happens that the errors are made by the bank, then we go and add the difference on what we refer to as a bank reconciliation statement. Okay, now let's move on to the second possible reason for the bank statement not being identical to the cash journal. So the first one, it is awareness difference. So what is awareness difference? That is when the business is not aware of the transactions reflecting, or the business is not aware of some of the transactions that are recorded on the bank statement up until the bank statement arrives in the business. So what I'm saying is that there are certain transactions that the business will only be aware of once it receives the bank statement. And prior to that, the business will not be aware of those transactions. And as a result, the business will not record these transactions on the cash journals. So what would happen is that, like, one of the examples is, say, received interest on current account. So the business will only see that once it receives the bank statement that, oh, we've received interest on current account, or we've received interest on bank overdraft, or there was a debit order, or there was a stop order, or there was a direct deposit, a customer made a direct deposit. So as a result, we're only acknowledging this now, and we're realizing that on our cash journals, this transaction is not reflecting, but it is reflecting on the bank statement. It is not reflecting on our cash journals because we're not aware. We only became aware once we received the bank statement. So as a result, there will be a discrepancy. Those transactions will not reflect on the cash journals, but they will reflect on the bank statement. So we need to go and add those transactions that we're not aware of. We need to go and add them on our cash journals so that, you know, what is reflecting on the bank statement can reflect on our journals. Okay. So the third one, so the third reason for possible discrepancies between the bank statement and the cash journal is what we refer to as a timing difference. So a timing difference, basically it means it's let me make an example let me make an example with this one. Say, for example, in the business, we normally receive the bank statement on the 27th, right, of each and every month. So if you're receiving the bank statement on the 27th, that means the transactions that occur on the 28th and on the 29th, they will not reflect on our bank statement. So as a result, when we compare our bank statement and our cash journals, we will realize that transactions that happened on the 28th and on the 29th are reflecting on our cash journals, but they are not reflecting on our bank statement. So now that is a discrepancy. So what we need to do in that case, we need to go and add those transactions on what we refer to as a bank reconciliation statement, right? So yeah, that is a timing difference. That is when and those transactions, that is when transactions that occur after we've received the bank statement are not reflecting on the bank statement. Obviously, they're not going to reflect on the bank statement because we've already received the bank statement and these transactions are only happening after. So those ones are going to reflect on the following month's bank statement. So yeah, those are the three possible reasons for discrepancies between the cash journals and the bank statement. Yeah, and with regards to with the timing difference, normally it would be like payments, payment, because normally we would have like payments where we made a payment on the following day when we've already received the bank statement, and obviously it will not reflect on the bank statement. So yes, so just to go to list again, or to to relist those three. So the first one, I said it is an error. When we have errors, the error could be made by the bank or it could be made by the business. If it is made by the bank, we need to go and record that difference on the bank reconciliation statement. If it is made by the business, we need to go and make the necessary amendments on our cash journals. The second reason for discrepancies is awareness difference. So that is when the business will only be aware of certain transactions once that we receive, as a business, we receive the bank statement. So we need to go and add those transactions on our cash journals so that we can reconcile, so that what is reflecting on our cash journals corresponds with what is reflecting on the bank statement. And then thirdly, I mentioned the timing difference, where we receive the bank statement at a certain date, say on the 27th of every month, and as a result, transactions that will occur after the 27th, meaning on the 28th and the 29th, will reflect on our cash journals because we would have recorded them, but they will definitely not reflect on the bank statement because we've already received the bank statement on the 26th. So the bank statement that we have at that point in time will not show the transactions that occur after we've received this bank statement. So as a result, we need to go and add those and record those transactions on the bank reconciliation statement. Okay, that brings this specific video to an end. On this one, we're tackling the possible reasons that result into our bank statement, or the transactions reflecting on the bank statement not being exactly identical to the transactions reflecting on our cash journals. And that brings this video to an end. On our next video, I think it's gonna be still be bank reconciliation. We're going to look into detail. We're going to look into the process of recording on the bank reconciliation statement in detail on the next video. Thank you very much for watching. You're more than welcome to comment down below. You're more than welcome to pose any questions for better understanding. Thank you very much once more.